Welcome to the channel. My name is Valen Penn, and today we will be talking about dividend stocks and why people invest in them. A dividend is the distribution of a company's profit to shareholders. In simple terms, a company is paying you to own their stock. So why would a company pay a dividend or want to pay a dividend? It's because having a dividend showcases that a company is mature and has financial strength. Another reason is that they also want to reward their stockholders for trusting in their company. You should know that a company is not obligated to pay a dividend. The actual dividend and amount are determined by a company's board of directors. A dividend can be paid monthly, quarterly, semi-annually, or annually. The most common is quarterly. There are important dividend dates you must know about: announcement/declaration date, expiration dividend date, record date, and payment date. The announcement/declaration date is when the dividend is announced by company management. The ex-dividend date is the expiration date for when you are eligible for the dividend. If the ex-dividend date is March 23rd, you have to own the stock by the end of the day on March 22nd. The record date is the next business day after the ex-dividend date. It is when the company checks who will be getting a dividend. The payment date is when you receive your dividend. You will also receive your dividend at the end of the business day. Now let's get into why people invest in dividend stocks. The most obvious reason is that you will earn money for holding a stock through dividends and stock appreciation. You don't have to do more work than researching and buying a stock. Most dividend stocks will keep paying you even if the economy is in a recession or if the stock market crashes. The best dividend stocks will increase their dividend year after year regardless of factors. There's even a list of dividend-paying stocks that have increased their dividends for over 25 years. These stocks are called Dividend Aristocrats. Some well-known names on this list are Coca-Cola, Pepsi, and McDonald's. As of January 2022, there are 65 Dividend Aristocrats. But how much do people make from dividends? Well, let's say a company's dividend yield is 4%. If that company's stock price was $100, then owning one stock of that company would pay a dividend of $4 for the year. Using these same numbers, let's say you want to make $20,000 in dividends a year by the time you retire at age 60. You have needed to invest it $500,000 by that time, which is a large sum of money for anybody. But with dividends, you don't need to invest the entire $500,000. You can invest the dividends you earn every year until age 60 to help you achieve $500,000. You can also set up your brokerage account to automatically invest your dividends back into the company. This is called a DRIP. Most people do this so they can take advantage of compound interest. If you use your dividends to buy more shares in stock and then use the dividends from these new shares to buy even more shares, the dividends will compound. As you can see in this graph, the blue line is investing cash consistently and using a DRIP. The orange line is also using a DRIP, but is not investing any cash into the stock. The red line is not investing cash or using a DRIP. Investing your cash in dividends over decades can make it easier to reach your dividend goals. One thing to watch out for is a high dividend yield. A dividend at 5% or less is safe, while anything more is considered risky. A company with a high dividend yield is more likely to cut or suspend its dividend. Thank you for watching the video. Please like and subscribe. It'll help the channel out.